Finance Minister Nirmala Sitharaman presented the Union Budget for 2023-24 on 1st February. With Lok Sabha elections coming up in 2024, this is the last full budget of the Modi government. I am Prathik Desai and I am going to tell you all about the changes that many in India look forward to the most from the budget. What do income taxpayers get?
Now I come to what everyone is waiting for. Personal income tax. I have 5 major announcements to make in this regard. These primarily benefit our hard-working middle class.
The Finance Minister announced 5 changes in personal taxation. 4 of these are in relation with the new tax regime to make it more attractive to the taxpayers. In case you have forgotten what the difference between the old and the new tax regime is, here you go. The old tax regime had exemptions such as house rent allowance, interest on home loans and investments under Section 80C. Exemptions up to 2.5 lakh rupees were allowed. The new tax regime, which continues to be optional but will be treated as the default one according to the Finance Minister, offers individuals and Hindu undivided families lower tax rates if they do not avail the exemptions I mentioned earlier. So let's look at the changes. As of now, those with incomes up to 5 lakh rupees do not pay income tax in both old and new regimes since the law provides rebate of tax till that threshold. In her first change to the income tax structure, Sitharaman has increased the rebate limit from 5 lakh rupees to 7 lakh rupees. This means that individuals with an income up to 7 lakh rupees will not pay tax as long as they pick the new tax regime. The second proposal involves a change in slabs in the new income tax regime. The structure has been changed by reducing the number of slabs from 6 to 5. Take a look at the new slabs. 0 to 3 lakh rupees, the tax liability is nil. 3 to 6 lakh will be taxed at 5%. 6 to 9 lakh will be taxed at 10%. So, if your income is between 3 and 7 lakh rupees, although there is a tax liability as per these slabs, you will get a rebate when you file your tax returns. This effectively means zero tax for an income up to 7 lakh rupees. Moving on, 9 to 12 lakh taxed at 15%, 12 to 15 lakh now attracts a tax of 20%, and above 15 lakh the tax liability is 30%. To make this simpler for you, for example, a person with an income of 9 lakh rupees will be required to pay only 45,000 rupees as income tax compared to 60,000 rupees currently. The third proposal is for the salaried class and the pensioners, including family pensioners. The benefit of standard deduction has been added to the new tax regime. Each salaried person with an income of 15.5 lakh rupees or more will be entitled to a benefit of 52,500 rupees as standard deduction. The fourth change concerns the high surcharge in the country. The FM brought down the surcharge from 37% to 25%. The surcharge is applicable to those individuals whose income levels exceed 50 lakh rupees and companies whose income levels exceed 1 crore. This will bring down the highest tax rate in the country from 42.74% to 39%. Remember that all these changes apply to those under the new tax regime. If you would like to benefit from these changes, you could opt to switch, but the option to continue with the old regime if you choose to forego these new announcements continues to be available. The fifth and the last announcement was for the tax exemption on leave encashment. Until now, when non-government salaried employees retired, their leave encashment was exempted from taxation to a limit of 3 lakh rupees. But now, this limit has been pushed to 25 lakh. What did you make of the budget this year? Let us know in the comments below.